Hello and welcome to Prime Playbook. I'm Vinnii Motiwala and today we are stepping into the investor's mind. Here's a question worth sitting with, right? If markets are or were purely about numbers, why do smart, well-informed people still make poor investment decisions? The answer is more often than not isn't a lack of knowledge, it's the behavior of the investor. Fear, greed, overconfidence, the urge to chase quick returns, the paralysis of waiting for the right time. These silent forces also shape far more the investors' realization, the investors' portfolio than their knowledge. And today we are decoding exactly that, the mind of the investor behind making the money. And joining me to unpack all of this is someone who has been studying the investor behavior, is involved, what they also do at HDFC Securities with clients. What is the thought behind this as well? And we have Sambath Kumar, Chief Distribution Officer at HDFC Securities. Hi, thank you so much for joining us on the show and thank you for coming back.
Yeah, thank you, Vinnii. Good morning and good morning to the viewers as well. And thanks once again for having me here again. I think the introduction speech itself says that I have a lot of questions to answer. So over to you.
Absolutely, a lot of questions to answer, but the biggest one I want to start with is, let's talk about the mistake that you see investors make in terms of behaviors, right? What is that one thing you have noticed over so many years of your experience that investors are still making even today?
So I'll give you with couple of 2 decades of
And
experience. We have
more
seen.
in terms of behavior.
Yeah, absolutely. That's what it is. The behavior hasn't changed, whether it's 2 decades or I don't know if it'll change also. I'm not guaranteeing that. What I'm seeing in the last 2 decades is, as you rightly said, everyone wants to become rich and they want to become rich today. It doesn't happen that way. They need to understand that. People have understood that. We are seeing some kind of investor behaviors over a lot of, what has happened in the market, your Lehman crisis, your COVID, all those have absolutely made investors to be aware and at the same time being fearful. I think being fearful, being greedy, being wanting to be rich, overnight, all those myths have made the investors make more wrong decisions than the right decisions. We keep saying in the last 2 decades, do not time the market. I think it took almost a decade, credit to Amphi, the investor awareness programs, the campaigns, credit to CNBC for the number of investor awareness campaigns you guys come out with. Amphi and other bodies together collectively has definitely had a hand in terms of ensuring that the investors take the right decision. But I think it's a journey which doesn't have an end. It's going to be an ongoing journey to keep educating the investors about the behavior. That's something which we'll have to fight for it, and I'm sure we'll be successful down the line.
Absolutely. We continue fighting. Our endeavor when you're in personal finance is
Correct.
to hope that investors actually understand that,
Correct.
everything doesn't, you don't have to enter into anything just because you've missed out on something, or the fear
Absolutely.
of that missing out, FOMO,
Yeah.
as everybody calls it
Yeah.
now.
Yeah.
But, Sambath, I want to understand the most common type of mistakes you see across age groups. Is it that, maybe if you've turned older, you're becoming wiser, or even at certain point of time, people still make these mistakes of FOMO or greed, whatever you want to call it?
No, no. I think it doesn't change. That is
Nothing
for
at all,
sure.
no matter
Nothing
what.
at all. Whether you are old or young, the mistake
So
remains
with every
common.
birthday, we're not becoming wiser.
No, not wiser at all. We can see that. We saw that last time I covered about the F&O
Yeah.
space and all that. We've seen that. That's what it's like. Are you trying to find a black cat in a dark room which is not there? This is exactly what every investor tries to do it. You said FOMO. That is something which is predominantly dominating the investor behavior to go and do a wrong decision, to make a wrong decision. They just fear that, I've missed this. This sector has gone so rapidly. Did I miss it out? My friends have made money. You really don't know whether if that friend has made money or he's just shooting out in the air. All these patterns and behaviors around them is forcing them, which we saw it and which we are seeing it as well. But having said that, we'll have to say that how the consumer behavior or the investor behavior has changed over a period of time. Your classic example is your SIP, your systematic investment. What it is today, close to
31,000
2000,
crores
yeah,
approximately,
33,000 crore kind of systematic investment planning is what we have done collectively to make investor make a goal. That's the way we need to approach this. You keep showing them the goal as a financial advisor. I think we need to go and show them the mirror. Look, my friend, you started this journey in investment for this goal. Why do you need to change your goal? Because there's a war which is happening 5,000 kilometers away from you, which you don't have any clue about it. So please stick on to your goal. You keep showing them the mirror. What is the reason you started this for journey for? And why do you need to keep shaking it based on the situations which you don't have complete control about it? The more you do that, I think they're going to take much more well-informed decisions in future, and which they are taking it as well.
Absolutely, that well-informed decision to continue with that decision is also key,
Absolutely,
right?
absolutely.
Sambath, there's one thing also, that when you win once, you have tasted that victory,
Yeah.
and then that overconfidence comes
Yeah.
that, I may do it again.
Yeah.
Is that one of the biggest mistakes that you see with investors?
Yes.
Or is it the mentality of maybe FOMO, overconfidence, or loss aversion? What is that one mistake that you see consistently happening?
See, the overconfidence is the right word. FOMO, I think we have discussed enough.
Yeah.
Let's move to the next word,
Next one.
overconfidence. We saw it in COVID, Vinnii. So we saw that, everyone becoming a fund manager, which is also not good. We saw that post-COVID, what happened to the stock market. Every stock corrected itself. And then we saw the rally happening. So people became so confident, and they just thought that they can make money in as quickly possible, as quick ways as possible, and it's easy making money. That what happened, it led to your F&O volumes, it led to the number of demat account opening, it opened a different market, the number of broking platforms, all that is good. But how many of them made consistent money over 6 years period of time? I'm sure the data suggests that people have made money, but the data is overwhelmingly wrong and disturbing when you've seen that 99% people have not made money in F&O space. So that is something which I think is also a big parameter, which is a daunting task for us. The overconfidence, you go and speak with them, they tend to today. Too many information is also something which we need to cover up over the period of time, next 10-15 minutes. I think the amount of information one has to filter through itself is the biggest challenge. Then comes the confidence as well. That is also another challenge which we are seeing.
Because see, everything that is there, what you see or what everyone reads on any platform seems only positive.
Correct.
So then you get that confidence, I'm going to do it. So then that information, how does an investor change that behavior? Because it's not going to be easy.
It's definitely not going to be easy. See, investor also, we are lucky we meet some few well-educated, investors who are clear in what they want. Many a times we see investors who are ultra HNI, who are family offices. We find many a times what they think, what they want to do, and what they do are three different things. They think about investing in something in so-called long term, and they're actually planning for a short term, and they invest in something which they are not convinced at all. We have seen this many a times. So once you're clear in what you want or what you're looking at in a 10-year cycle, you really want to buy that house down the line 10 year, and this is what the road I'm going to take. This is what the investment pattern I'm going to take. This is what the investment behavior I'm going to take. You should be rock solid in terms of the external parameters coming and influencing your decision. That is the behavior which you need to adopt to get your best out of it.
But there's a bit of a hiccup that comes during that time, is because
Yes.
it's long term, you will see some bit of a fall in the market.
Correct.
And I think that's when, we also get a lot of queries and people are worried.
Yeah.
They want to just shut everything. They want to
Yes.
know whether should I remove my money. Let's educate our investors again.
Okay.
And help them understand that, what should they be not doing at such a time with fear and taking those actions because of your fear.
A very, very, very valid and right question, when you asked it right. Because see, it's easy to say in a closed door studio to say that, you shouldn't do this.
Yeah.
Imagine your hard earned money being invested and there's a war situation out there. Your confidence gets shaken. You're seeing your portfolio statement that, it's a 30% down and negative and red. Then that is when you tend to make that common mistake of redeeming or changing your goalpost or getting confused and going pillar to post to find a solution. I think that's when many people, 9 out of 10, make the mistakes, and that's when only 1 or 2% continue to make that huge, reap the benefits out of it. But it is easy said than done. But at least whoever sees this should again go back to that journey. It's like my favorite example, when you start your journey of reducing weight, anyone for that matter, that extra cheat meal, what you call, which does tempt you in between, but you know that you're not going to eat that one more gulab jamun out there, so that you see a difference out there end of the week or the next week. That exactly applies here as well, in the portfolio as well. You know that there are certain things. Let's take the current situation where the war, we are living with the war for the last 6 months, and we've been living with Ukraine and Russia war for almost 2-3 years now. So what exactly has happened? These are things which are not in your control. But had you continued your SIP in terms of whether mid cap or small cap, I know in the last 2 years it has not given you a fantabulous return, but you didn't start the SIP for 2 years. You need to see your goalpost again. You need to see what is, when did you start, why did you start? If you have started for your girl's education, if you wanted to send your son abroad, he's still waiting to go abroad, right? So why do you disturb that? You continue that, have the conviction, and that's when we say that pick the right asset, pick the right product. That also plays a significant role. If I have to give you a short answer, if you have to pick the right product, right asset class, and then you don't need to be worried about things which are around you.
Today we have a cheat meal. Instead of a cheat meal, we also have Ozempic. No, is there something like that we can have for our portfolios? Is there some cheat for that as well?
I wish they found a Ozempic in portfolio, which everybody can consume and make it
We're
positive.
still working on it then.
We are still working on it. I don't think we'll find it, that's for sure, because it's the hard way that makes you rich.
You have to spend your time in the markets to earn that.
Absolutely.
There's no easy way.
There's no easy. Do not time the market. We've been saying that again and again and again. It is the number of months, number of days you are going to spend in the market and make the money work for you is going to make you wealthier or richer and achieve your goal.
The key right now is to have patience.
Have patience. Absolutely.
As an investor, if you want to be here, you want to make that money, you should
be
your
patient.
patience.
That's what I say when you decide a goal. Decide the time frame as well. And then comes the asset class. If you want to become rich, I'm not saying in a very short duration you don't have the right products. You have the products, but it comes with a risk tag attached to it. Are you ready to take that risk? Larger family offices, ultra HNAs can still do that. There are multiple asset classes where they can diversify. But I'm talking about the retail investors. The retail investors need to stick on to them, their goals and their tenure and the right asset product for a stipulated time. Then they're going to make it really worthwhile.
Sambath, there's this one thing. We always say panic selling is never good, never okay. But maybe when, that bear market is starting and someone has maybe gotten it right and done this, managed to sell it at that right time, is it always in hindsight a bad mistake in panic selling, or is there some sort? I don't think there is, but I'm just asking from a point of view of a viewer maybe who's looking at this and has managed to see a
fair point of view here, Vinnii. I'll tell you, there were in the last 2.5 decades, there were times that, you buy the stock and you just forget it and just seal it and then you see it growing. It doesn't happen that way anymore. Periodical review is something which is very much needed. I mean, I'm not saying that if you buy the right stock and stick on to it, you're not going to create wealth. No, it will definitely happen. I'm not saying, or I'm not against that. But periodical review will definitely help you. You should know that, you're not supposed to see your portfolio every day, every month. I'm saying that at least 6 months once. It's like your blood test. You just need to review it. Are you sticking into it? Are the fund managers or is your asset going in the right direction? Is something you have all rights to sit with your financial advisor, understand what's happening around and try to correlate with what's happening around in the market and vis-a-vis your portfolio. Is it reflecting exactly? Because you find out, hope you're not selected a contra fund where everything is going right and yours is going wrong, or everything is going wrong and yours is going right. I mean, you should have a contra fund as well in your portfolio, but that is something which you need to do, not frequently, but a periodic interval. You need to understand that and stick on to it.
Sambath, we spoke about it and we touched upon it a bit, that waiting for that right time.
Yeah.
Investors still do it.
Oh, yes.
I think it's just a feeling, right? Like if I'm also looking at it, or if someone is looking at it, it's fair to think that is it the right time right now? Should I wait for it? You put on your logical thinking hat as well, that maybe I'll see something. How does one differentiate? Yes, we always say that just enter. But sometimes you have to have that logic also, right?
No, it comes. See, the market is same for you and me. Market is not different for anyone. It's a level playing field out there. How do you sail that and become successful or reach your appropriate destination is where the biggest game is. And that's where the mathematics, science, your psychological behavior, everything comes into picture out there. But I'll try to give you a solution out there. There's no as such fixed solution there, but I'll try to touch upon there is a solution. Those kind of time, I always give this example of ETF. My favorite example, I'll quote Ramayana as an example here. When Lord Hanuman was asked to get the Sanjeevani, he was confused. He forgot the name. What did he do? He just picked up the whole mountain. So ETF is a classic example of that. You do not know what is happening in IT space. You know that few IT scripts are going this side, but few are going this side. I mean, do not worry about it at all. Pick the entire ETF, IT ETF. That's the solution, which I see it. It's happening out there. And also, you very rightly touched upon, Vinnii. See, you cannot time the market. You cannot predict the market. We all know that no astrologer can predict the market. Nobody out here can say that what's going to happen tomorrow. That's not going to happen. That's not in your control. But what is in your control? Your investment pattern, the style of investment, that is something which is in your control. If you feel that, trust your instinct, trust your, give marks to that as well. You might be right also. So what I'm saying is, if you have 100 rupees and you feel that market is right or wrong, or maybe I should invest, maybe I shouldn't invest 20 rupees or invest 15 rupees, invest 15%, a lot. Something which you are really feel like, if the market goes, it goes, you are 15% at least right. And what happens if after a week, some drastic happens, then you still have an 85% of you're sitting in cash. That's exactly why all the financial advisors keep coming and telling you in all those interviews, investment, the timing of the market is something which is completely you should avoid. But how you do the investment is definitely in your hands, and you should better stick to that journey of 15%, 20% of allocation from your pool. That works out.
Just start somewhere. It's not to worry. Keep adding a little bit when you feel.
Absolutely.
But Sambath, this is one thing that even in terms of data points, like you said, ETFs, they've done well. Even the July number, we see an increase coming in ETFs. So it seems like at least there's a respite that viewers are and investors are making the right call, at least looking at ETFs as well. But cash is still lying idle, right, with you. So what is the cost? Help us understand, help viewers understand the cost that you pay for letting the cash just be sitting there, instead of making that call of taking and investing that 15%.
It's a very long way of answering that. I'll try to put it in a very shorter format. See, keeping in cash is never a loss-making thing. You're going to anyway keep it in your savings account, which anyway is going to give you whatever interest, savings interest, or you can always have it in your liquid fund. From there, you can always have another redemption process to do that investment. That's why you need to have that approach of structured investment. That's when the structured investment comes. You don't need to, as we all keep on saying that, don't time. That's not in your hand. But the structured way of getting into the market is definitely in your hands. You can always plan or a process put in the place. Every 6th day or every 7th working day, I'm going to invest in this particular theme or in this particular ETF. For instance, last time we came, I talked about gold. You're seeing it shining again. It's going to shine again as well, looks like. And of course, we saw that defense ETF doing pretty well. We mentioned it a couple of months back when I was last year as well. So those kind of themes, you can stick on to it. And ETF is definitely picking up in the retail space. You're seeing the continuous surge in the numbers in terms of people investing in gold and silver and all the other ETFs as well. So have that approach is definitely going to help you.
Sambath, we spoke about a certain good ways of investing, right? Continuing with your SIP, goal-based investing, planning your investments on the time, versus, this is the method to go.
Correct.
But making that good decision is also important, right? At that time.
Yeah.
What is it, maybe as a question that you keep getting over a period of time, where investors are somewhere lacking in taking that decision also? Whether it's good decision versus your goal is there. But to combine both of them is going to be important as a behavior.
Very, very practical thing. When we struggle with this, I would say that, in the last 2 decades, meeting so many investors, many times we come out, it's like a patient going and approaching a doctor. You need to be clear in what you're communicating, where exactly it pains, what exactly is happening to you. Then the doctor will be able to do a solution. Then what the doctor does to you is the diagnosis. Then he gives a solution to it. It happens absolutely in the similar fashion. You need to be very clear in your goal. If you're going to come and tell me, Sampath, I need to see, there are only 3 different phases. There is a wealth accumulation phase, in a growth phase. Are you in that phase? Or are you in that wealth protection phase? Sampath, I don't need my money to, put so much struggle to it, take a larger investment risk. Then it's only wealth, not accumulation space, wealth protection space. These are the only 3 phases. And then there comes a retired teacher or a professor coming with a huge lump sum. Sampath, I'm just looking at a periodic inflow of money coming in without taking much risk. So if you are clear in your communication in what you want, I think half the battle is won. So then we will be able to give you thousands of solution in terms of, I do not want, there are certain investors I really admire and look upon them. They come and tell me, Sampath, I do not want to enter into equity. That clarity in thought is very, very absolutely appreciated. You don't need to come to equity to achieve your financial goals, because he might be 65 years, he might be 70 years. I would definitely say that, there are enough bonds and debt instruments available for him to take care of it. Maybe I'll suggest a 10% or 5% of gold or other ETF, but the rest is all lying. So as long as you're clear that how you want to structure, how you want to grow, half the battle is won there.
Absolutely, half the battle is won there. Now, one more question on goal-based investing that I have. Does goal-based investing actually change the behavior, or make it a better behavior to take the decisions? Does it help?
I'll try to help you rephrase the question, Vinnii. Lack of goal basing makes you make erratic decision. Trust me on that. The whole game changes when you know that you don't have a goal. I want money to double, triple. It doesn't work that way. You want to double your money, you have all rights to make your money double, but you please define the time period. Then we will be able to give you a right solution or right approach on how do you want to do it. There are few investors who come and say very clearly, Sampath, I need everything in paper form. Sampath, I do not want real estate kind of investments. I do not want to enter into metals. I do not want to enter into liquor and other stuff. I do not want to get into FMCG. So people, more you ask questions, then that gives a better solution for that sometimes. Not sometimes, many a times only that gives a solution. The more questions you ask them and clarity. Lack of goal is making you make those kind of decisions, wrong decisions, uninformed, not informed decisions, and making you not achieve what you want.
So long or short term, whatever it is, but some goal that you should have for
Absolutely.
what purpose you are investing
For what purpose you are investing.
So that way you can decide how your portfolio would look.
The moment you decide your goal, then comes everything else. How you structure it, what you want to invest, where to invest, how to invest, all those comes into picture. The lack of goal planning is what is making you.
So that is that one habit you would say an investor who's starting off, at least have a goal before you start.
Absolutely.
Would you say that?
That's the
first thing.
That's the only thing you need to define. Be very clear on what you want to achieve out of when you go in with a financial advisor. Sit with them and be clear on what exactly you want to arrive at. 5 years what your goal has to be, 10 years down the line what your goal has to be. That's a classic example I would like to put it across.
Sambath, is there a way that AI maybe could, AI, everybody uses it. Is there a way that is also helping maybe investors go and take the right decision and change the behavior of maybe FOMO, overconfidence? Is that
so? AI is a tool which will definitely going to help you make lesser mistakes. Let's put it that way. It is going to come and caution you. Hey, look, this is what you're going to do. Maybe it'll have its negative impacts. Maybe that is something which will do. But let me put it to you this way: that even AI is not going to predict the market. So be very clear about that.
Predicting.
So no prediction. So the behavior is within you. You have to be strong. Maybe AI will help you do a better behavior. That is for sure. Is the kind of platforms which we are seeing today. I think that's going to influence your decision. I'm sure that it's going to influence in the right direction as well.
Are you all using it somewhere?
Yeah.
Is that something that is changing and helping you all as well?
Oh, yes. We have been definitely AI started to have an impact on us, on what kind of offerings we are making, and definitely the kind of questions which these days we see from the investors is definitely AI has a place in it. We cannot escape.
Absolutely. We cannot escape the change, but patience.
Yeah.
Continue with that. Have your goal. I think that's my key takeaway. First, start with your goal. Have your patience. Keep it in check. And then do not let the markets take you for a ride.
Definitely.
Just be in the ride and keep playing there.
Yeah, patience and perseverance is going to remove the pain in your financial goal. That's the way I'm going to sum it up, Vinnii.
Sambath, thank you so much for joining us. As always, it's a pleasure having this conversation.
It's a pleasure,
and
trust me on this.
Investors get more out of this as well and understand their behavior and helps them in taking the next steps which are better for them as well. Thank you so much.
Thank you, Vinnii, for having me once again. Thank you so much.